Hello and welcome to this special report here at XM.com. We'll be discussing the outlook for oil prices. I'm Maria Pachordiz, and joining me is investment analyst Cristina Partenido. So Cristina, given that oil prices have slowly continued to climb since September, everyone is wondering whether the energy crisis might worsen and drive prices back above the $100 level as winter approaches. What's your take on that?
Hi, Maria. Well, that's a difficult question to answer, actually, because we face a complicated situation in the energy sector. There are a couple of confluence global matters, from politics to economics and climate change policies, which make predictions hard at the moment. But overall, there is a belief that oil prices may remain elevated by the end of this year, and I wouldn't rule out that case and the bounce back to 100. If we look at supply drivers, the European Union seems to have enough inventories to go through the winter. Almost 90% is full right now, well above the European Commission's initial target of having storage 80% full by 1st of November. It's also above the 5-year average of around 89%. So the energy supply may not be a worry for the European Union during the winter months, but finding new supplies next year could be challenging, especially if Russia decides to cut production to countries that will adopt the price cap set by, plan to set by G7 countries in December, or motivates OPEC members to further extend their production cuts. If that turns out to be the case and energy prices rise further, the US may release more inventories to meet demand, especially if potential restrictions to energy companies which faced record profits during the previous quarter discourage any supply increases in the US. A deal with Iran also looks to be complicated. So if, for example, recession proves less serious than feared in the coming quarters and demand from China resumes once zero-COVID policy restrictions are removed, that could add a floor under oil prices, and perhaps we may see another rally towards the 100 level. Now, in case inflation and a tighter monetary policy trigger a bad recession, instead easing demand for energy, I think it's less likely that we will reach the 100 level, even if OPEC continues its production cuts and sanctions on Russia further worsen.
So what are the key levels to watch in the short term?
While looking at the charts, WTI crude oil is currently testing a key support trend line around 87.80. If the decline continues below that level, and more importantly below 85, I expect more bearish sessions ahead. Otherwise, another bullish correction could take place. If another bullish correction takes place, that could drive the price up to 95 and then towards the key 97.40 barrier. We'll get more details on the G7 price cap in the coming days according to the headlines. So the details in the plan could probably create some volatility, especially if there will be an immediate reaction from Russia, which may further worsen the oil outlook for 2023.
Cristina, thanks so much. And thanks for joining us at XM.com.